Welcome to the MUFG Global Markets FX Week Ahead podcast with Lee Hardman, Senior Currency Analyst at MUFG. It's Friday, 8th May 2026, and joining Lee to pose some questions on the financial market themes for the week ahead is Seiko Kataoka Fisher, Director from Japanese Customer Sales for EMEA in London. This material is only intended for professional investors in jurisdictions in which its use is permitted under applicable laws, rules, and regulations. It has been produced for information purposes only and should not be construed as investment research or advice. MUFG EMEA disclaimers and disclosures can be located on our website.
Hi, Lee.
Hi, Seiko.
We've seen the dollar weaken over the past week. What has been behind the latest sell-off?
Yeah, like you say, we've seen some further weakness in the dollar over the past week. And to us, the main trigger has been the renewed optimism that the US and Iran are moving closer towards a deal to try and end the war in the Middle East and to kind of gradually reopen the Strait of Hormuz over a 30-day period. At this point, there's still no kind of deal finalized, but we are waiting to see whether Iran will accept the terms of this deal, which has been proposed by the US. The risk still is that, like you say, Iran may feel that it's more in their interests to prolong these negotiations. Obviously, the longer the Strait of Hormuz remains closed, the more that the risks are that we could see disruption in energy markets and a bigger hit to the global economy, and that ultimately could mean that Iran is in a better position to get better terms in a deal with the US. So that's still the risk, but the market is obviously very hopeful and optimistic that a deal can be reached sooner, and that improvement in risk sentiment has encouraged kind of global equity markets to hit kind of fresh record highs over the past week. Obviously, on top of the better news from the Middle East is also the strong earnings growth that we've seen for US corporates in Q1, with another quarter of double-digit annual earnings growth helping to boost investor sentiment. And this improvement that we're seeing in global investor risk sentiment, like I say, that has been a key factor which has contributed to the weaker dollar. On the other side, we've seen the high beta G10 commodity currencies outperforming at the dollar's expense. The other thing that we've been watching as well today was the release of the latest payrolls data from the US. That did provide some further reassuring news that the labour market in the US does appear to be showing tentative signs of improving at the start of this year. If we look at private employment growth in the first 4 months of this year, it's averaged around 90,000 per month, which is definitely a pickup from what we saw in the final 4 months of last year, when private employment growth averaged about 35,000 per month. So it certainly should give the Fed more confidence that the labour market is stabilising and there's not as much need now for them to lower rates further in the near term. Like normally that would probably provide some support for the dollar, but at the moment it's not really helping to strengthen the dollar. Like, we don't think it significantly changes the near-term outlook for Fed policy. The Fed have indicated that they're comfortable to keep rates on hold in the near term, and we don't think today's payrolls report really changes those expectations.
We've also seen the US dollar weaken against the Japanese yen. Do you expect stronger Japanese yen to continue?
Yeah, well, this move lower that we've seen in dollar yen over the last couple of weeks, it's been mainly driven by what looks like intervention from Japan to support the yen. If we look at the latest current account data from the Bank of Japan, that does appear to show that Japan has intervened on 2 occasions since the end of last month. Cumulative purchases look like they total around 10 trillion yen. That would be a similar amount of intervention to what we saw back in kind of late April, early May of 2024. On that occasion, dollar yen similarly had been kind of threatening to break above the 160 level. And then when the intervention took place, that pushed dollar yen down towards the 152 level. But what happened in the following couple of months is that dollar yen resumed its upward trend and eventually hit a a new high of 162 in July 2024. And we think the story from intervention back on that occasion is that if there's no change in the fundamentals, then intervention from Japan is unlikely to reverse the yen weakening trend. And we think on this occasion we see some similarities, so that there is a good chance that the yen will resume its weakening trend if Japan stops intervening in the FX market. Obviously, at the moment, the higher energy prices and higher yields outside of Japan, alongside improving investor risk sentiment, all of those factors are still headwinds for the yen. So it's difficult to see the yen staging a more sustained rebound at this stage. Having said that, though, obviously, if the yen was to strengthen on a more sustained basis, we would need to see a change in the fundamentals. And there is the possibility that we could see a change in the fundamentals, like if we saw a quicker deal to end the conflict in the Middle East and to reopen the strait. I think that would lead to a sharp fall in energy prices. If we saw the price of oil dropping back below, say, $90 per barrel, I think that would be a supportive factor for the yen. It would also make the US rate market more confident to price back in more Fed rate cuts, which again would be a supportive factor for the yen. And then finally, on top of that as well, I think if we saw that uncertainty related to the Middle East developments, if that uncertainty was to fade, the BOJ have indicated clearly that then they would become more confident as well to resume rate hikes. So in that scenario, you could see the BOJ hiking rates as well in June. So in that sort of scenario of a quicker deal to end the conflict and reopening of the strait, that could mean that fundamentals also move more in favor of a stronger yen as well. So that would be I suppose, the best case scenario for the yen in the near term.
Thank you very much, Lee.
Thank you.
Thank you for listening to this MUFG Global Markets podcast. Rate, review, and subscribe. Contact your MUFG sales rep for more information. Come back next week for more insights from the Global Markets Research team.